cool. Yeah. So the longer I've been doing this, I gravitate towards stocks that are 100, 150, $200 plus that like I can find a big range, like a big base, and I'm literally just looking to catch intermediate term trends on like the expensive stocks. So like I have basically two main watch lists. I have my master list, which I've got like 1,000 names on. And then I've got kind of my more focused list, which isn't really focused anymore. I've got like 500 names on it. But it's also the list that like I continually mess with and I continually tinker with the alerts. So like I more or less trade off of weekly charts. It's really like weekly and monthly charts are really all that I prefer to look at. And then the daily when I'm looking to enter and kind of set alerts. So like let's say, LRCX, for example, um, you can remove a bunch of these lines and you basically just have this kind of big range over here from like 675 down to, I don't know, let's just say 500. I like seeing this kind of big range, like sideways range. Like I'm not too good at like playing these nice, neat, high tight flags or, uh, a lot of the cute charts that people post. Like I'm not that
Are you talking about my post there, Nick? By the way, this is Nick
no.
at JFDI on
Oh yeah,
Twitter
yeah.
and StockTwits, saying what he's kind of looking at on charts from a TA perspective.
Yeah, so like LRCX, for instance, like the way I look at this is like, okay, it's been moving sideways for, basically a year, and it's trying to emerge. Like it wants to move higher. You saw this crazy strength here on Friday, and I'm like, well, fuck, like I'd buy this thing right here at highs, like through the highs, or pretty much anywhere on weakness, all the way down to like let's just say 670 basically.
To the
Like I'd
bottom of
buy
that
anywhere in
consolidation
here.
zone, the intermediate zone you have there.
Yeah, like I already think the thing's emerging. Like I already think the thing's starting to break out. So I'd be willing to buy on weakness. The moving averages that I pay attention to are no different than most people. Like on my weekly, I like the 10 week and then the 30 and 40 week, which is the 150 and the 200-day moving average on the daily. On my trading desktop, the way I have my charts laid out is my daily chart is in candlestick form. My daily and monthly charts are in candlestick form. My weekly charts are in bar charts because I like to look for that 3 week tight pattern where you get 3 weeks of consecutive tight closes. I'm not, just from looking at this real quick, like you have kind of a 3 week tight right here at the bottom of this base, which
So
I don't know.
is that what you're meaning when you're posting 3WT,
Yes, yeah, yeah, yeah. So 3 week tight
3 week
is
tight?
just what they say is that tight weekly closes is just signifying that institutional or the big money is pushing price around and they're pushing for it to close at at a pretty close spot. So it's just an identifier for institutional money. So like where a perma bear is going to be seeing this right here, right, and think kind of, oh shit, this is a bear flag
Mm-hmm.
because like prices moved off the highs here, prices under the 200-day, under the 50-day. They think it's a bear flag. The optimism in me is like, no, you've got this range coming down, this channel coming down. You got a 3 week tight here at the bottom of this base. That's institutional money pushing price to close right here at the bottom of this range. They're stepping in to support it. Uh, I don't remember where I was really involved in this. I'm not currently, but it's on the top of my list at least for this upcoming week for sure.
So really, you're just paying close attention to price action, and if you can get a zone where it kind of stays in the same range for 3 consecutive weeks, that's kind of the sniffer for you, right? Like you're
Yeah,
ready to pounce.
use it in conjunction with other things. Like use the 3 week tight pattern, like when you for, or at least for, in my opinion, like see it in conjunction with it's sitting on support, or it's sitting at highs, or it's sitting on the 50-day moving average. Like, because then it's like it's just another layer to your edge, saying like, okay, when price holds its 10-week moving average, it's signifying strength and institutional money. Like we have these big ranges. Like use them in conjunction. Like I don't know where I'm kind of going with that, but use it in conjunction with other TA is kind of is basically what I'm saying.
Hey,
I
GP
use the
here.
I use the term pretty loosely.
Just a quick question. Do you watch like percentages? It's like 1 or 2% range, or are you looking
No,
for or like highs
like
and lows?
no. So like what I'm looking at here, just take these lines out. I like to think that stocks make symmetrical movements. So if I'm looking, I don't pay attention to measured moves too much. I know I do post about them. Like this line right here, this 860 is probably the distance from like here to here would be my guess. Is probably where I got that. Yeah, it is. So, uh, on a short term, like let's just look at LRCX right here. You have a range from 640 up to let's just say 730. Let's just call it 100 points. When price moves out of this range, the measured moves is going to be 100 points higher for me, or in my opinion. So, like, I'm shooting for this thing to hit, 8. If you believe in round numbers, you could probably start taking money off the table at 800 with an ultimate measured move target of 830. On a longer term, zoom out a little bit, and you have this move higher, consolidation, move higher. That's where I came up with this kind of measure move up here, up to like the 950-ish is, 950, 1,000. And that's 1,000 is probably where the thing's going. But yeah, I don't know. I've become kind of a lazy technician. Like I used to be real. I wanted everything to look really pretty and like perfect, and I missed too much. Got stopped out of too much. I don't know.
That makes
Yeah,
sense. I
I want
think
to. I want to. I want to catch it. I want to catch the meat of a trend. Like I want to catch a trend. I don't really like 2020 was awesome, but like it'd be much greater to like catch those moves over instead of a stock running 100% in a week or a couple months. I'd rather have a stock rip 100% over the course of 12 to 18 months where it's stair stepping and you can literally just keep on loading the boat.
Yeah.
But I mean, I can't. Beggars can't be choosers. We get the market that we get.
Right. Yeah, that's exactly
So,
it. We have to trade or play in the market that we have, not the one we want, right?
yeah, I size pretty like a trend trader. Like I have no problem getting into a shit ton of positions at once. My weakness has definitely been really building into like my top, let's just say 5, 10 positions or 5, 8 positions. That's been what I've been focusing on pretty hard this year, which we haven't had a whole lot of opportunity for it, but I don't know.
I
It's a game that's constantly tinkering with. I love it.
I like the trade that you got set up there. I just measure how I measure, which is not
Yeah,
exact either, but I got close to that 900 spot too. Um,
sure.
just just doing it real quickly while you were going through that. So I do like the trade, and I mean of what's going on in our market right now. It seems that um, this one could be one that works in the intermediate term. I don't know, GP. You have anything?
Yeah, I have a question for you guys because that's
Yeah.
so I see it on the weekly, but if you expand, I mean, pull in the time frame to the daily, on Friday we had a huge move in the stock,
Yeah.
6.5% or something like that, and it couldn't take out the prior high of day. So something like that usually flags concern for
Oh,
me, right?
sure.
So
Yeah.
in this moment, and then you see it happening on lower volume too, right? So
Yeah.
um, the like when you have these strong moves, they tend to take out pivots, like, and clear them without any hesitation or any flinching at all. And you have this stock, which has been really kind of strong for a really long time, not showing the strength to take out a pivot. So does that spark any concern for you in terms of the trade is a trade, right? We do probabilities ultimately. If it
Yeah.
fails, you get out, all that stuff. But like if you're giving advice to your former younger self, is this something you'd be paying attention to, or is it when you take an entry on weekly, you just continue the weekly process?
Uh, I mean, if I was talking to my younger self, it'd be like, dude, the market's not really forgiving right now anyway. Like, even if you do take the trade, like you should be small because even for one, I didn't even really think about that. So to your point, but in thinking about that, like the market's not really rewarding breakouts. It hasn't really been all year. Um, so whether it was this stock or any other stock, really, it wouldn't really matter. I think at this point in time, my advice to my younger self would be like, dude, even if you want to take the trade, take it small and have your stop like under 650. You know,
Yep.
like if you really want to be involved right now, like be fucking small, just enough to scratch the itch of FOMO, or just sit on your hands and let better opportunities present
So
themselves.
I'm going to play devil's advocate here, and I
Sure.
hear both of your concerns about the strength it had on Friday, but still couldn't overcome the range and take that pivot. But I will look at the previous 3 days, and I've been using the volume shelves a lot. This guy bounced right off of where you would expect it to, and I can share my screen and just let you see what I'm looking at. So, you look at this, right? And I see RSI breaking out on a daily time frame. Not the stochastics is turning up, which I like, but this bounced right off of this area here at 655. And Nick, I think you're exactly right. If it fails 650, you're at least going to have some more downside, most likely. But this could set up to actually be the breakout. Now, if we go back to the week, which is what you were looking at, we got the same kind of setup. We can pull the RSI back a little bit further, but it's not quite breaking out, and the Stoke's really high. So we might have another inside week, but I don't think
Sure.
necessarily jumping in the trade right here, basically at all-time highs, is would be that big of a concern to me. Now, I don't like to jump in on the highs. I think I try to buy low and sell high, as most of us try to do. But in the
Sure. Sure.
setup that you're describing, Nick, I can absolutely see this become the bottom of the pivot, right? So instead of looking at it this way, as we can't get through that, well, we might be through that, and then we might be sort of faffing around before it moves, right?
Yeah. Right. Totally.
So I think just looking at where volume is, where it's been trading sideways for a while, I would lean probably this is going to break to the upside more than I would be leaning to this is going to the downside. But that's how I look at it. So
I mean,
I appreciate
ideally,
your feedback on how you think about it too.
it doesn't break out from here, and you get the opportunity for it to pull into like 700. Like, let's say by the time it pulls into 700, you've got the 10-week pulling up there. Um, you've got like a big cluster of like the 10 and 20-day moving averages kind of right there under 700 as well. So, I mean, again, like advice to younger self, like, yo, have your alerts set at all-time highs. Have your alerts set like 700 and maybe even a little under 700 at like 680, 690. Um, I don't know. Yeah, I'm with you. I like all your guys' points.
Yeah, so I guess that it stems from, I think, let's forget the last 2 years of the market, right?
Sure.
2019, 2020, 2021. Uh, all kinds of stuff's been happening. Options activity's been going through the roof and all that other stuff. But prior to 2020 happening, we had technically strong moves, right? And in strong stocks, that's why I ask. It doesn't mean you shouldn't take the trade. It's more so that, like, when you take a trade, you have like a confidence level of how you
Right.
think it's going to work out, right? So it's that conversation, that internal, like,
Yeah.
mind fuck, right? Like, sorry, like, I don't mean that in a derogatory way, but it's just it's the concern here is like when we had these moves in the past before all the COVID nonsense happened, is you saw it take out pivots here, and like what I've seen over the last 6 to 12 months is this will probably gap over that pivot and then fail, right?
Sure.
So that's what I've been noticing a lot.
Yeah.
They don't let you participate in the breakout, and then they sell it out to you as it breaks out. So it's just been something that I've been keeping an eye on. There's been a lot more failures across the board. Obviously, we've all seen it, right? Like it's no surprise here, but so I go back to like where I was taught how to do TA and all the things I've learned and picked up is like these are the signs that we're looking for in terms of what's going on with the market. Is like in a strong market, in a strong stock, they take out pivots when they're supposed to, right? Not gap over and all that.
Yep.
It's during the
Yeah,
day. So
for sure.
that's kind of where that question kind of stemmed from. Is just like I'm seeing a lot more of this. I'm gonna fake you out to the upside and take you out to the downside.
Well, I think that brings
Yeah.
up a really interesting point. Right before we started recording, GP, you said TA's really not working, and maybe dive into that, thought process just a little bit because I think you're kind of hitting on it here to some degree.
Yeah, I think that's so. Like everything I've learned over the years, and there's constant learning, is that none of this shit makes sense. Like to put it as
Yeah.
frankly as I can. But what I mean by that is the technical breakouts, the pivots that and like prior pivots not holding, breaking right through, and this is happening on less than desired volume, right? So um,
Yeah.
I've talked about it on Stock Twits quite often recently. Is where's the volume, right? Where's the volume on these breakout moves down? Roku is down 330 points in 6 months, and the
Yeah.
volume doesn't even compare to like 6 months ago,
Yep.
right? So like, is it if you're concerned that the bear market is coming near you soon, then these moves are just starting to the downside if that's the case, because the volume here is going to then pick up to the downside because people are in from such lower entry points that they have been stubborn this whole ride through thinking this is just a normal correction, right? So as this starts breaking down, you're going to have the volume pick up. So that's what I'm keeping an eye on here in terms
Yeah.
of, does volume pick up to the downside or is volume going to pick up to the upside?
So you
And
don't have your bear suit on just yet, but you know where it's at in the closet. It sounds like.
yeah, that bear is lurking. I don't know what it is. Yesterday I was reading. Look, I'm in the process of buying a car right now, and I want to shoot myself. And I mean that metaphorically, not in reality. It's just like it's such a process.
Yep.
Car prices have bumped, I don't know, 30-40% in like a month. Like it's impossible. You have to go back to 2000 to get a car for like 6 grand with 200,000 miles on it right now. So And the car market is what 1.4, 1.5 trillion in debt right now, like the debt car market, loan market. So like that immediately started thinking, I'm like, so is this where the new bear market's coming from? Like, is this going to be the car bear market, right? We had the home bear market in 2008. So my mind is obviously in the bear territory, but right now there's no indication, right? Like the chart I shared last week on the Qs, everything held the way it was supposed to, right? It had a little bit of scare to the downside, but where it closed is what matters. And so until those things start breaking, it's really hard to put on your full bear suit.
Well, go
But
ahead and
there's
pull that guy
definitely,
up. I think you had the Qs, right?
yeah. Let me pull that up. I have it up. I just need to share my screen. So give me a second.
Have either of you guys read Japanese candlestick charting techniques
I
by
have.
Nice? I think it's Steve Neeson.
No, I haven't read that book. No.
Dude, it's like I mean, like the way that I use it on the much higher time frames.
Mm-hmm.
It does a phenomenal job at explaining the psychology behind individual candle formation, and in terms of like what bar, like a lot of these, like, dojis and spinners and all of these, things that people call out, a lot of them aren't necessarily like reversal bars. They could just be a change in trend, like, and a change in trend is sideways.
Yeah,
Anyway,
yeah. I think
just a tidbit for a book if you guys are.
Yeah, I think I was talking to someone on StockTwits trying to explain to him it's not a bearish engulfing bar, and you're like, you try a few times and you're like, I give
Yeah.
up. Right?
Yeah.
That's just like I hear you, but a bearish engulfing is a reversal trend pattern. You don't get a bearish engulfing in a downtrend. It's just a
Yeah.
downtrend,
Right.
right? Like
Yeah.
that's the fundamental conversation of what what these candlesticks represent is it's the psychology, right? It's not the
Yeah.
pricing that matters here. It's the psychology of, at least for me. And when you have a stock that gaps over its prior day high, prior week high, prior month high, whatever time frame you're using, and then reverses down, that's super bearish. You should be concerned.
Yeah.
But if it's been down 60% in the last 6 months and it has a sell-off bar, it's not a bearish engulfing. They're it's nitpicking on details, but ultimately they're both crappy candles, and
Yep.
you should
Sure.
be
I'm
out.
really bad about that too. I'll use any candle that overcomes the previous week's candle, and say it's one or the other, knowing full well that it needs to be reversing trend. If the bearish engulfing is happening in an uptrend, right, and it engulfs to go to the downside, just the same as the bullish is the opposite of that. And I'm really bad about doing that because that's poor vernacular that we use on the stock twats. But you're absolutely right, GP. I hear that loud and clear.
Yeah, like it's semantics, but it's why I want to talk about the semantics is because it's important to understand what the ongoing trend is, right? Like having
Yeah.
a bear candle in a bear trend is a bear candle, right? Like no matter how
Yeah.
you do it, you haven't discovered water, right, or fire or anything like that. It's just a bear candle ultimately. So yeah, it's just the more informed you are, and I know you are bags, but it's just the general public isn't,
Yeah.
right? Ultimately, they hear bearish engulfing and they're like, "Oh, time to short," and you're like, "Not exactly. It could be a short, but not necessarily, right?" So you got to take a look at the other stuff that's going on here, right? So I think I'm sharing my screen. It's a good segue into what I'm showing here. This is the QQQ chart that I shared, I think, last Sunday. And it's just, this is how the reason I do this once in a while is to provide myself a blueprint on what has happened, right, in the past before. And if it does not happen again, then you need to be in cause for concern. And so I look through patterns that aren't typically what you see on most people's shares and stuff like that. So I try to lay out my thoughts. It helps me realign where the markets are going and where I think we could find stuff, right? And then I can take trades according to that, right? So if you're looking at this, you have to keep in mind that moving averages are important, but there's no magic moving average that it's going to be saved. When they're selling the crap out of everything, and when they're buying the crap out of everything. It's unwavering, it's relentless, and it'll probably either make you really happy or really miserable, right? So
price is number one. Price.
Yeah, it's just all it is, right? So if you're looking at this chart here, you can see that an uptrend happened, then the uptrend broke, tested the 120, tried to come back to the top of the prior uptrend, and failed once, then came back and failed again, came back, tested the 120 SMA. Why do I use the 120 SMA? Nothing fancy. It's the 26-week moving average, which is the half-year moving average to me. And that's where, for the last 6 months, people have found support, right? So to me, that's important. People are pretty fickle these days in terms of longevity in the stock market. So I only want to kind of go back the 6 months. So the 120 EMEA translates to the 26 weekly EMEA is about there. So that's why I have the 120 on here. So it came back and retested the 120 here, and then you basically see a whole new uptrend begin, right? And that, I think that was May, and it went all the way till October, right? Until that uptrend finally broke. So why I show this is because the uptrend breaking, the first time it breaks, is your first warning signal, right? So a lot of people are like, oh, well, the uptrend broke and now it's trying to reclaim or doesn't reclaim or something like that. So when you have a long-term uptrend break, you need to reassess the bullishness or the bearish. It's the same thing on the downtrend side, right? If you have a long-term downtrend break, you need to step aside, look at the chart again and say, okay, here's something that's fundamentally changed in the last 6 months, year, 2 years, however long that uptrend is. You need to reassess and see what happens. And until they reclaim that uptrend or start a new uptrend, it's going to get real choppy. And then if you're trying to take trades, if you're doing option trades like I do, it can get really kind of hairy because you'll end up paying, the premiums will be higher because everyone thinks it's going to bounce. So you'll end up buying calls 3 months out and the price won't go anywhere, but you'll slowly see the premium decay, right, over time. So it's just something to be careful. But so here we had the same scenario happen into last Sunday. It moved right into the 120. Everyone last weekend, I don't know if you guys remember, everyone's like, oh my God, the market's going to die, right? It's, it literally, everyone was bearish. Everyone's like, and I'm out here saying, this doesn't seem too bearish to me. This is holding the 120 SMA. It's held it before. Came back Monday and we gapped down. So I had egg on my face and I felt a bit responsible, but ultimately, if you take a look at the day, I have it up here, right? If you have it here, we gapped down below it and then closed right back above that. And then we broke higher, and the 50-day became a area of concern, right? And the 50-day is an area of concern because it's what a lot of people watch. And I was expecting, I think I posted it 2 bags, right? I think we talked about it. Like it's the expectation after a sideways / downtrend is the first time it touches the 50-day. It's not going to just blow through it. If it does, it's a really strong market, but most likely it won't. And then ultimately we gave back most of the last 3 days in one bar because that's how this market rolls. But and then everyone got bearish again on Thursday, and I took the other side of that conversation, which was, this is just the back test of the 120. If you're going back to my chart here, this was the second back test, right? So right here. If we're looking at this piece, it broke over here. This was the 50-day. I don't have the 50-day because I don't like having the charts clutter too much with all my typing and stuff like that.
Unlike
But
me.
huh?
Unlike me, who will put everything on a chart.
But I do normally when I'm looking at it, but when I'm typing it out like this and doing stuff, it just gets too much.
Yeah, for sure.
Right. So if I added the 50-day here, you would see the 50-day was the resistance here, and it came back and tested this 120, held, and basically started a new trend, uptrend here for the next 3 months. So my thought process from here is that we just started a new uptrend, right? Like if we're looking at this chart, we're about to start a new uptrend. At least that's my initial thoughts. If we fail and we gap down below this long-term uptrend line, you see this is the weekly on the right hand side here. This is the daily. This is the weekly uptrend line that started from post-COVID breakout, and it's held 1, 2, 3, 4, 5, 6, 7, now 8 times. So what we're looking at here is what's the next candle. This was a really important candle to hold, but now we need the follow through. So is the follow through down or is it up? And in my humble opinion, I think it's going to be up. But
I'm with you.
So.
You mind if I chime in real quick?
Yeah.
So not so much a question, but just kind of like I agree with you. I think that this next move is up, and like how I would be playing that is I'd really be looking at this here, like the 390 right here. So I use the 50% retracement a lot in just how I view strength. So for instance, I'll measure it like on any wave. So like basically from the 50% retracement from this high to low is right here at this 386. So in my mind, the first thing I want to see is the Qs reclaim that 386 and hold above it. Once the Qs pop above that 386, I'm like, all right, the Qs have retraced the 50% of this down move. I now am definitely in the camp that I think this thing is moving higher back towards highs. I have this kind of puke bar right here, and then I would use the same mentality is looking for this thing to get above 382. It gets above 382. Okay, well then it's easily going to go after 386. If it gets above 386, all right, it's time to play. Then I have this kind of pivot right here, 390. That thing gets taken out, and it's off to the races back up towards highs. How we handle the highs is kind of to be determined, and whether or not we feel like we have enough oomph in the tank, take out and continue higher, or just test the highs. And we're obviously in a range. So, yeah. However, my point was that like I agree with you. I think we're moving higher. That's just how I would look at it.
Yeah, and
you can go back to your.
Yeah, let me share the screen. But I think that's what I look for is the little small tidbits, and I'm sure you guys do as well. Is that when you have obviously we're on social media, and the sentiment is pretty god awful, and rightfully so, man. Some of these moves down were just nasty. Just this week, right? Like they were just absolutely awful. If you're looking at Netflix, looking at ROKU, Square, it doesn't really matter, right? Unless you're in some of the boomer stocks, and the boomer stocks also gave in towards the end of the week too. But what you notice is on the screen I'm sharing here is that on such a bearish week, right? Like we're talking about, like it was pretty awful. We managed to close above last week's close.
Right.
I know it's by 5 cents or 10 cents, but that to me is significant, right? Like you had this, it's a significant tidbit. Now what we do with that, who knows? But that to me is like we have this really, really bearish kind of sentiment and market, and yet we still manage to close And if you're looking, my thing is volume. I know a lot of people say to ignore volume, is because it managed to close green on the week and above last week's close, which was 379.86, and we closed exactly at 380.01. You see it's on heavier volume too, right? That to me, those two things together is saying we're going to go higher. And what I know about the market is it doesn't like having people participate for so many reasons.
Max pain
is exactly what it is. And to me, there's parts of me that are super bearish, and there's individual stocks that are still bearish, but
well, I think there's
the indices don't reflect the stocks, right? Ultimately,
right.
So exactly. I can see us having a massive blow off top from here, because the last 6 to 8 months, you've had people get destroyed out of their positions, right? Said uncle, and we reverse higher here. No one's going to believe it, and then we're going to take out all-time highs, and then you see the chases on.
Well,
right?
I think you nailed it, GP, with closing higher than the previous week. While it's not an end-all, be-all, it does show even with the volatility that we had this past week, price still exceeded last week's price. And I tease about this a lot because that's just my personality. It's another opportunity to be like, this is where the bears dropped the soap, right? Like they had they had every chance to push this down, and they just couldn't do it. Now we got to see how this week plays out, but obviously with all the pain that are in these other stocks, some down 50, 30, 25% from their highs over the past few months. And we had the QQQs, right, which is technology as the whole, the 100 best technology companies, trying to push back higher in this flag that you've got there. To me, that gives me a little extra bullish sentiment than I normally wouldn't have had. I think last week when I came on and did just the recording, that's about as bearish as you get me. And we fell through, and all that move to the downside happened. But how did we close the week? We actually closed the week a little bit higher. So I'm dead on with what you're preaching right here.
Yeah, and hey man, we market opens on Tuesday and it gaps down 10%. We're back to limit down days, right?
Yep.
Who knows if that happens? The trades I have on, hopefully some of the puts I have and some of the boomer stocks pay off, and the calls get smoked, right? It's part of trading. It's not the end of the world. It's not the be all. But if you're not taking a shot when you have these little bits of tidbits, then why are you even in the market? You should go buy an index fund, and you should just do what you want to do with life, right? Why are you sitting here
charting, right? Like, why would you even decide to pull up a chart and draw lines on it if you're not going to try to take a stab at where you're putting marks on the chart? Why even bother?
That's my personal opinion, right? It gives us the probability, but probability is not 100%. Probability is 51-49, right? You're giving when you go play blackjack, the edge is to the house. It's usually 51-49 to the house, right? So where my thoughts are when it comes to TA is this gives us the edge back to be 51-49 us, right? We don't know where the big money is going to go. We can only postulate on where it could be going, right? So if everyone was as scared about inflation and the Fed and all this stuff, why aren't they liquidating their positions? Where's the volume, right? That's my big, like, you saw COVID, that was volume. They were like, we don't know what's going to happen. Everyone might die. This is the pandemic of all pandemics. And they sold everything. And the volume was there on every single chart. It was unfiltered selling, right? So where are we here now? Why aren't we seeing that level of selling?
So I think that in my opinion, the feeling is that we're much closer to the end of this than we are towards the beginning of it. You know what I mean? Like 2021 has really been a year of nothing but chop and names under the hood getting obliterated while the index is held up at highs. Like I'm in your camp. Like I'm pretty. I I think we're like, yeah, exactly like you said. Like, why are you drawing lines on a chart if you're not going to take a stab at this? Like, I was, as you were saying that, I was looking at AMD, and I was like, ah, shit. Like, AMD's totally put in a floor, like a 130 floor, you know, a 130, 133 floor.
Yep.
I'm like, why would you even fucking draw a line right there, man, if you're not going to at least take a stab at 130? Because, like, I don't know. I'm just in the camp that we're closer to the end of this chop. Like, maybe we see some, like, major selling come in and get some like real capitulation, like that would be a dream, honestly.
Well, I'm glad you brought up AMD, one of my biggest positions and a company and chart that I love. But I want to go a little bit different way, and I think combined with what you both said really hits on where I'm going with this, and I'm going to share my screen. I just look at Taiwan Semiconductor, right? And I think somewhere over here, I said, this shit's going to go. And it did. I mean, it's built out a year's base that we have here. The mid range is perfect with the amount of volume. But look what it did on Thursday. Like, it had a great earnings, and they tried to close it near, the lows. It pushed up a little bit. But then, it even came down here in the 136s on Friday to push back up to 140. Now, you can make the argument that that is not the most bullish case for TSM, but I will say it is the biggest component of the semiconductor ETFs. And I just think that if semiconductors are going to go higher, tech's got to rally along with it. Now, that doesn't mean the Palantirs of the world and the T-Docs of the world are going to come along with it, but the rising tide, in my opinion, raises all boats.
Yeah, for sure.
Yeah, absolutely agree. And I like if you take TSM and then you add in Apple and Tesla, right? Like I took puts on Apple on Friday and I hated every moment of it, but every inverse cup and handle. And by the way, like when people talk about head and shoulders patterns being like, these bearish patterns, it's actually the inverse cup and handle that's insanely powerful, right? And we've seen them play out the last 8 months. They're getting smoked, right? Like, so like if you're looking for patterns, you should be bearish patterns. You should be looking for inverse cup and handles in this moment.
So I've got a pattern I want to share.
Yeah, absolutely.
This is my due diligence page that I was preparing for this call. I like the Batman ears. I'm going to turn the volume off. But PayPal, it's a little bastardized when you look at this part. But you definitely have the two ears, you have the shoulders, and I love PayPal. I wish PayPal nothing but the best. But to me, unless the rest of the market is going to cooperate, right, and participate, the easiest way down in PayPal is down. That's sort of the path of least resistance right now. It's below everything in the world that you can imagine. But this double top, or this Batman here, kind of pointed it out perfectly. And I don't think that this little blue shaded area that I have here is going to be the area that it catches. I mean, it could. We all know anything can happen. But to me, it just looks like it still wants a little lower, maybe down into the 160s, high 150s. Hope it doesn't happen, but just talking about patterns, Batman's alive and well in this one.
So PayPal is the greatest example I can give you. Look at the volume on the downside. When they're liquidating, it was getting absolutely destroyed on volume, right? Like, so that's what you would expect from. Look at that volume, right? Like, you see that? That's insane.
And it
Right?
doesn't
Like,
look like it doesn't look like they're done to me.
and
Honestly.
no, that's my whole point, right? So if you're looking at, this is PayPal's one example, but if you're looking at charts across the board, like for example Roku and Square and stuff like that, the volume's just not there to support the size of the moves, right? So look at that. That's 330 points down, and what do you see mostly? To me, I see green bars.
I see Bags wishing he had sold it all at 450.
Outside of that, but right, like if you're looking at the volume, where's the volume? You'll see if you go back to October 2019, you see that big volume pickup and that big drop down that went from like 170 to what it was, like 100 bucks in like 3 weeks, right?
Yep.
That's what I would expect. So this is why I think if you're using traditional TA, the volume is not there to support the price, yet the price keeps going down. So you got to get out of the way until one of those starts to change, right? So, and you can try shots at support levels. Like if you try Roku here at a support level, then if it doesn't hold the support level, you get out, and then
Yep.
you wait for the next support level.
Yep. And I actually think Roku's good for a trade right here. I mean, I've got my channels, which I love, and then it's, bouncing right off this fib level that I measured. So I think, we could definitely get some price action
Yeah.
in Roku, right? That maybe resembles something like this, right? And it could fail, or it could go the other way, right? But right now, I just think that it's been in a world of pain for too long, and you can take a swing at trading this, but there's no way that I personally would want to get back long in the name right now.
Yeah, so I think if you follow Elliott wave at all, I don't know if I don't do a lot of it, but you're in a corrective wave. You're in the post five. It's a wave five failure. It didn't make the wave five, so you're in that corrective phase of wave five, which should hold around the wave four level, which is around the 160 we actually had a base in Roku all of 2020, I think,
Yep.
before it broke out towards the end of the year. So it's the bases that you're going to be looking for that should be holding, because bases usually act like magnets, right? Once you get there.
I thought I had big brain for picking it up right here. I was like, oh, this shit's gonna go, and it did. And then I'm selling the rest of my position in this area. It's like, I should have sold it all. But anyway, a couple other darlings, and one of them, I'm meaning that sarcastically. Boeing. To me, Boeing looks like it is ready to go. Volume is picking up, and I don't use the volume chart all that much, but I do. Again, I like the volume range, and it looks like it's just getting into this spot. It overcame this little gap right here in the volume pocket. Yeah, it's gotta get through, the 230s, but I think Boeing can get its legs and come up here in this 340, 350 area. Maybe I'm smoking a little bit too much crack on this, but it just looks like it's ready to go. It has faked out and tested this downtrend time after time after time after time. And I think with any good news, this is really just going to go. But anyway.
The monthly looks good.
Yeah, and on my charts, it's already broken the downtrend.
Like same thing with LMT too.
Yeah, so
and
I threw this top one in just to be sort of trying to be the top wick guy. You guys know that I don't really look at that much. I just try to hit the tops of trends, and it's already broken mine too, GP. It broke mine right here. But then the other one that I had was Moderna. Everybody loved them some Moderna, and I loved Moderna back here in like 150. And look, we're back at $200. Moderna just looks like a troubled chart. That doesn't mean the company's troubled at all, but the chart just looks bad to me. the RSI has been putting in a new higher low, but I kind of discount that. And just looking at price action, um, it can easily want to reach down into this 189 to 175 area. I'm kind of given that as a given, and that might be my opportunity to go long. You know, with these other highs basically serving as somewhat of a support. But you know, we had two charts that everybody loved and two stocks in PayPal and Moderna, and then Boeing. And to me, Boeing looks absolutely like the beast of the bunch.
Yeah, I agree. On Moderna, the only thing I would say is you have that potential reversal indicating pattern, right? That's a doji um, at a pivot, right?
Yep.
Like it broke the pivot. It couldn't accelerate. Like going back to, I think before we started the call, we were just talking amongst ourselves. Is like um, when things break upside or downside, you usually see it go further, right? Like
Yep.
it. You should see people are like, oh well, if it breaks this level, I'm out, right? And in this case, that prior pivot at what at 210 or something like that, it broke,
Right.
but it didn't get obliterated. So to me, it's something to watch here as a potential trend change up, right? Everything looks
Absolutely.
terrible.
Yeah, absolutely. And I think if I were more willing to roll the dice on this, coming back to our probability, you know, if this were 6, 9 months ago, I would have been buying off of the top of this level, right? Like 215. I would have been going like, this is a great price. But with the way the market's been behaving, you know, would it surprise any of us to come in below, you know, 190 at some point over the next week or two? So I still think that the bias to some extent is to the downside, but you're absolutely right, GP. This could be the bottom, and this could be the moment that it's ready to go.
Yeah, and then if you expand to the weekly just doesn't support what I just said. So I don't look at biotechs really. Um, so I'm just looking at this chart for probably the first time in months. You see how it closed below the prior week's close?
Yep.
That's a bearish thing, right?
Yep.
So that's the other thing that you got to watch is like if you find a daily chart pattern, what does your weekly and monthly look like, right?
Well,
If you're
that's kind of where I start on most of my charts, unless they have a really reliable monthly to look at. I start out with the weekly, and I get my channel right, and this extended up into an upper channel even.
yeah,
But then I try to find, all right, where are areas of support and resistance? Where has this sort of become a chop zone? And then that's when I lay out these colored rectangles I do. And then a lot of the time, sure enough, when I, you know, bisect that rectangle, I mean, it comes damn near close to wick tops.
yeah,
And that's kind of the way I sort of look down those, you know, support and resistance zones. That doesn't mean that this was the top of the zone. That doesn't mean that this was going to be the bottom and the most solid support as this fell. It could be anywhere in this area, you know, and then we have the channel coming up. So, you know, if I'm looking at the confluence, basically like 188 is a spot that if it comes to, I might start adding in slowly.
yeah. That makes sense. And if it breaks that 188 level, you know what to do, right? Like unless you know that you're just starting your position and you want to get long further.
Yeah.
Um,
Well, if I were to take it long at 188, I would probably be willing to buy it down here to about 170, and then once I would probably keep a pretty tight stop around 165 or so. Um, would be where I would look to stop out if it didn't turn around once it got down to 170.
yep. The 162 is the breakout candle, right?
Yep.
That's where it started its big wave three
Yep.
uptrend.
Yep.
But
Right
if
here,
you're in the
162.
Elliott, if you're in the Elliott wave air theory, what I was talking about before is these are natural points of where the end of wave five and the beginning of the corrective phase start to kind of bottom out. It's not going to be a V bottom Like let's be fairly clear on a lot of these moves. I don't think it's going to be the V bottom at all. I think you're going to find basing now, which is something that we didn't get going into the 2020 moves and 2021 moves. We didn't get much basing. They just broke out. So now we get the long corrective kind of, I'm going to frustrate you for years before we move higher, right? And markets have accelerated in general, so maybe it's not years, but it's just
sideways is a direction too, right? I
Yep.
think that a lot of times all of us get in the mind frame, well, this has to keep going lower and it eventually has to reverse. Well, sometimes that reversal can be sideways, right? It's gaining momentum to go in a different direction eventually. And that frustrates me. And I know that frustrates a lot of traders, right? Because how long are you willing to stick with it? Amazon's the best version of this, I think, right now. Amazon's one of the most owned stocks in the entire market. And what has it done? It had that one sort of breakout moment that we thought was happening back here in June, July. And then November it ran up, but otherwise it's just been sideways. I mean, we're talking, what is that? Almost 18 months? I could have had 2 babies in that time. I did. As a matter of fact, I did. My wife and I did. But anyway.
Yeah, and Amazon's, I was part of the breakout in July, and I was really happy, and then I was really sad.
Yeah.
Because it just failed. And once so this is going back to if you take out all-time high, and I think at that time was 34.54, and then you come back and break that all-time high, it is game over for a while, right? So like if you're trying to find a bottom, you've just said this stock can't support higher prices and we're going lower. And then what happened to earnings, right? It got absolutely
smashed.
Yeah, it got destroyed.
I mean, you might as well, if that's one thing, like I see people say, or what I hear people tweeting, like if a breakout fails, especially out of like a big range, like let's say Amazon, for instance, you might as well just have it in your head that it's going to go back and test the lows of that range. It might not, and any time that it puts in a higher low from there, then it's great. But it's more than likely going to go back and retest the lows of that range, which Amazon pretty much did.
Yeah.
But, anyway, sorry, I didn't mean to interrupt.
I literally wanted to go back to 2,500. And if it does, it's a screaming buy for me. So.
Can we not go to 24, 25?
No, for your sake and some of my calls' sake, I hope not. But that's the sentiment washout you'll need. But the fact that it's consistently made higher lows since the COVID bottom is encouraging. But if you're looking, I've been paying attention a lot more to the options market, and I don't normally, and it's driving me nuts that I have to. But you'll see this on a day-to-day basis. A price will start to move out, and as soon as it starts to move out, you'll see these 1,000, 2,000 blocks, especially in Amazon, come in, and they'll start selling call spreads. Right? You're looking at and
there
I'm talking about
golden sweeps over the last week and a half in Amazon. Like I was noting that, and some of it, when you look back, was actually spreads, right? So they're basically collaring the price. But I just, this is me talking my book, right?
Yeah.
I just think that it's came in and it's found this basically midline of the range, for almost a year now. And if it's going to keep sinking, I think it's going to do it now rather than later. It absolutely can keep going sideways. And I think to what you were mentioning earlier, Nick, right? False moves equal fast moves. And that's sort of what, I worry about more than it just chopping sideways. do I want to have a significant chunk of capital in the name while it goes sideways? Not really, but am I going to be quick enough to deploy it all? If 2400 does come, God please no. But if it does, am I going to be able to catch that knife? And I would rather be in the name right now and sell out of it if it does break down, as opposed to try to catch it on that breakdown. So that's just the way I'm looking at it. And as long as it sort of holds this $3,000, I'm pretty content, honestly. It's only going to be a few percent down for me until it breaks three. Hopefully it doesn't break 3,000, but if it broke 3,000, so.
And it just had a 20% correction, like from November, so November, that Friday OPEX, when it was trying to break out of that all-time high failure before, literally, I think about an hour before that Friday OPEX for November, they came in and sold a ton of calls for zero delta calls, right? 0-day calls, and the price, I was watching it in disbelief, but it was like 37.12, I think, and it was up like $62, $65, and they started selling those calls, and dealers had to adjust their positions, and it went from 60 up 62 to down like 100 in like an hour and a half,
Yep.
right? So it's been an options seller, and they're doing these odd call spreads too. They're $5 call spreads if you're looking at some of these, like the 33.65, 33.70 call spreads for next week. You're like, what? Who's gonna put that kind of capital at risk? I don't really understand it, but that's what they've been doing ultimately. Yeah, let's see what happens, right? So
Yeah. Well, guys, I appreciate both your time, and we can talk market all day and night if you want to, but I want to be conscientious of your time. I really appreciate the fact that the three of us could get together and just talk shop. It's nice to do that. And I interact with the both of you quite a bit, so I appreciate personally just taking the time and to get to speak with you both. So I really appreciate it.
thanks, Bags, for putting this together. Really, yeah, same here, same sentiments, and like I finally can put a voice to a name.
Yeah, totally.
And it's
I'm
just
gonna
it's nice.
hear what you guys are tweeting now for sure.
What was that, Nick?
Like I'll be able to hear your guys' voice now when I'm reading your tweets.
Yeah, I'm glad we did the collab. We should probably do one in a short time. Let's see what happens in the next couple of weeks. We might all be drinking and
Yeah,
collabing.
yeah.
Yeah.
I don't want to schedule you guys in for every Sunday, but I'm happy to hop on and shoot the shit with you guys whenever and for however long we want to do these things. So I really appreciate it, Nick. Great
Yeah, I'm
chatting
pretty
with you.
open.
You guys got
Yeah.
any parting shots? Any last words before we get into trading on Tuesday?
Yeah, I got one. But Nick, you haven't said a lot, so I'll let you go first.
No, I just say keep the rubber side down. Uh, that's all. I mean, I'm I don't really have anything to say. I've thoroughly enjoyed listening to both of you guys speak quite a bit. So thanks for inviting me.
Next time we'll block out like 30 minutes just for you.
Yeah, careful. Once you get me in my mouth going, like I'll just keep rambling on and on and on. So, anyways, yeah, it's been great. I'm down for this whenever.
Sweet.
So,
Awesome.
What's your parting shot?
So my parting shot is keep an eye on Netflix. Netflix has been the bull market leader for the last decade. Its earnings are coming up, and its reaction to earnings is going to be a very telling sign of where the market's head.
market's
Right.
going.
So
Hey, it's down there where I sold it in June or July.
yeah. So I was going to share this chart before. On Netflix,
Yeah,
but
throw
we
it
kind
up.
of ran it.
We have a couple minutes. Go for it.
All right. So let me hear. I shared this with some family and some friends. If you see this chart, this is the Netflix chart, right? On the left-hand side is what Netflix did before Reed Hastings announced to split back in 2011 of Quickster, right? When I saw the chart, when I was looking at the daily chart over the weekend, I'm like, this chart looks really familiar. So I started looking back at the history of Netflix. And so I started doing some pattern recognitions, and you can see that it was the beginning of a massive move down, right? And if Netflix's reaction to earnings is not great, you could be looking at like some really Netflix could be going back to like 380, 390. Whether that translates to other market participants is something that I'll be watching.
Yep.
But this is the chart that concerns me the most.
So if you're looking at the comparison, you're basically on that chart to the left, you're really just starting that sort of chop in that leg down for the next leg down, the gap down after that, right?
Yeah, like so. If you're looking at the chart here, I'm going to try to zoom in a little bit. This candle was where Reed Hastings announced the Quickster, and you saw a massive move up here. Everything was golden, and then the next 2 days we did nothing, right? So we are here right in that box area. They announces on Friday, an hour before close and earnings in 4 days that they're raising prices, right?
So you've got 2 leg downs from here potentially if the pattern is the same.
So this is the area I'll be watching here. This 500 level or 503. 503 breaks. The reality is it's probably going back to 380. If you remember from 2018, 2019, 385 was a major resistance point until it broke in 2020, like April or whenever that was. So that's the area I'd be looking for in terms of a break. If this holds, this pattern is not the same, and it's just my eyes deceiving me, and you can ignore it. But this is the one I'm watching this week because I'm in the camp that Netflix is our bull market leader, and I'm talking about the last decade, not the last 6 months or whatever. Right, last decade or so.
Earnings is on after market closes on the 20th, so
on Thursday, yeah.
Yeah, we could see this play out.
So this is the tidbit that I this is my general cause of concern.
Well,
if that makes any sense.
Not to leave us with your bear suit fully on, but that's depressing me just looking at it.
But do you see the similarities here, right?
Course,
like
yeah.
I do.
Yeah,
so,
for sure.
And so I've been talking about how broken Netflix has been since 2020, right? The ultimate COVID stock. It's the ultimate stock during COVID, and it barely broke out, right? Like it was acting weird, and it wasn't really moving hefty. Yes, it tagged 700, and you can say it had like a 70% or 100% move from the COVID lows. But the reality is the all-time highs is what was important for me, which is 423.
Yep.
And when 423 broke is when the actual move started. So it only went up from 423 to 700, and that was a really long and slow and painful road to get to 700. When Netflix has broken out in the past, it breaks out. You're talking about 100, 200% moves, and then it consolidates for a while, and then bases, and then makes this next leg move higher.
It's like Batman pattern there with the ears.
Yeah. So this one's the chart for me that says maybe I'm wrong about the QQQ trend, or maybe it's just Netflix only, right?
Yeah, below 510, I would be very worried about Netflix.
Yep. So this is my little tidbit. This is what I've been working on over the weekend.
Good stuff, guys. Nick, thank you. GP, thank you. I really appreciate it. We'll chat offline and we'll line up another one of these. And next time we'll be prepared for a full hour and a half.
Perfect. Thank you for hosting this, and pleasure
We'll
meeting
have
with
a
you.
day or
All right. Love it, guys.
All right. Thanks.